Breaking as of this moment, mortgage rates. Freddie Mac says the average on 30-year fixed-rate loans is 3.98%, below 4%. Fixed for 30 years. Joining us now is MBS Highway CEO Barry Habib, who says the incredible, you would go for adjustables. You don't want to lock in under 4% for 30 years. You don't want that? Oh, wow. No. Go with adjustables, you say?
I think adjustables are a great choice. Not to say that it's the choice for everyone, but you have to remember that only 6.5% of all applications are adjustable rate mortgages.
Wait a minute. Only 6% of applications, is that for new mortgages or refis?
New mortgage applications. Doesn't matter whether it's a purchase or a refinance, but applications only coming 6%. In right now. That's the shocking value of it. And think about this. Mathematically speaking, even under the absolute worst conditions, if you took an adjustable rate that was fixed for the first 7 or 10 years, it mathematically needs to be, it will be, under any circumstances, cheaper than a 30-year fixed rate would be for at least 10 to 12 years, maybe longer, probably longer. And the average individual, to stay in a home for 10 years with the same mortgage in the same home, your chances of doing that, less than 8%.
Mathematically, you're absolutely correct. But emotionally, I'm thinking of the risk. If I get myself a 3.9% 30-year fixed-rate loan, I sleep well at night because I know exactly what's coming down the pike at me for 30 years.
You're correct, and that's what many people think. That's why only 6.6%. But when you do the math, it does work out, and I think a lot of people don't actually take the time to do the math. Sure. Yeah. And here's another interesting thing you can do. In many cases, that adjustable rate might save you, I don't know, $150 or $200 a month. And people say, well, I'm going to blow that money anyway. If you have the discipline to do this, you take that difference and you put it into the mortgage payment, thus reducing your principal over time. What you're doing is when it adjusts off of a lower principal balance, and you build up a tremendous amount of equity. You'd be shocked.
That's smart.
In many cases, you could build $20,000, $30,000 additional net worth.
Okay. Now, what can if I come to you, or you can send me to the right person to get me what rate on an adjustable loan that stays at that adjustable rate for 10 years? In other words, I pay for this rate for 10 years, and after that it balloons or whatever. What's the rate that I pay 10 years?
Well, here's the interesting thing that's happened. Now, fixed rates have gone up since over the last 6 months, okay? Yeah. Adjustable rates have not moved up as much. And you're probably looking at, on a 7-year adjustable, about 3/4 to 7/8% lower. On a 10-year, you're probably looking at 3/8 to 0.5%.
Okay. So if I go out for 7 years, and it's adjusts after 7 years, you can get me a loan at around 3.25%.
I think that you'd be at between 3 1/8 and 3 3/8 would be there for 7 years. You know, it depends. And when you look at these 3.98%, let's call it 4%. The Freddie Mac numbers. What's a little bit tough about them is it represents what happened last week. We can't get last week's rate.
What does it adjust to after 7 years? Well, what's that higher rate about?
Well, it depends on what it is, but many of them are based on LIBOR, which currently is like 0.73. In order for, and then you'd have either a 2% cap. Some of them have a 5% cap. So.
Right. You do good math there, Barry. We appreciate that.
Really interesting.
They're very interesting stuff, because a lot of our viewers are thinking, refi, should I, shouldn't I, fixed rate, adjustable. Good stuff. Thanks, Barry.
Thank you.
Break.